Hey docs, welcome to this episode of A Good Problem to Have. I'm your host, Tyler Olson. Today I'm talking about the pros and cons of adding 1099 income to your income streams. There are good reasons to think about it. It's not all great, so it's not always the best decision, for everyone. But I wanted to talk through some of the things that you should consider. First of all, it's important to understand something fundamentally about employment offers, though. I've had this come across my desk a few times, and I've had some conversations with tax compliance experts, and they shared some perspective with me that I didn't even realize at the time. And that is, this is like, I'm trying to center this on like a specific employer. Like, let's say an employer, like an employer hospital, is offering you a job. In practice, they're not going to have this is a W-2 job offer and this is a 1099 job offer. Now, I know that this exists and this does happen, but I want to make sure that you all understand that this is not actually how it's supposed to be, because if a job is being offered to you on a 1099 basis, that's also being offered as a W-2 job, in the eyes of the Department of Labor and to a lesser degree the IRS, those two offers cannot exist in the same space. Because if a job that is being offered as a 1099 job is, for all intents and purposes, an employee role, because they control where you work, they control how you work, they control how much you work, that's an employee job. So I'm not mentioning this at the outset because if you're getting the chance to explore different options, that you need to shy away from the 1099 job. No, not at all. But you should not start this process thinking, I would like to work for this employer, a specific employer, and then I'm going to try to work out whether or not I can make it a W-2 job or a 1099 job. Because while that, you wouldn't specifically be on the line or in line for trouble or issues, the employer actually would. You don't want to get into that fray. Mainly from the standpoint of like a quality of employer standpoint. Because if they're willing to go into that and get enmeshed in that, offering the same job, whether it's for an employee role or a 1099 role, it's worth considering the quality of the employment situation to begin with. So that's just a side note. I want to make sure that's clear, because I get a lot of questions about that, and you might be pushed into a situation where you were W-2. I know a lot of doctors are, where you're a W-2 employee, and then they're like, well, now we're gonna change this to a 1099. And there's nothing wrong with that. You're not going to get in trouble if you make that conversion. But from a laborer's rights standpoint, there are some issues there. So you just don't want to be overtly and proactively trying to examine every job offer and say well, what if it's W-2 or what if it's 1099? Because that is not supposed to exist, even though in many cases it does. All right. So first off, I'm bringing this up because you may have heard about a lot of good opportunities with 1099 income, that there's opportunities to deduct more, that there's more retirement plan contribution opportunities. And, that's not untrue. It truly is possible to do so. So let's talk about those. Let's say you're comparing, a job where you're making $350 as a W-2 employee and a 1099 job that's paying $400. Now, I mentioned the higher amount for 1099 because if you are going to compare apples to apples with work quality and work product services that you're providing, the 1099 job should always be paying more, because you're paying more in taxes Now, there are benefits to it, but you're paying more in taxes that the employer is not paying, namely their half of FICA tax. It's around 7.65%. That normally you share that responsibility with the employer as a W-2. But if you're self-employed, then you take all 15.3 some percent of that FICA tax. So your pay should absolutely be going up. Nevertheless, let's say, your 1099 job could be 400,000. Your employee job, W-2 job, is 350. And let's say that they offer you the chance to participate in the 401k, and they're going to pay you a 3% match, which is that's pretty good, right? So if it seems good, but at 3% of 350, that's $10,500. Now, if your 1099 job is 400,000, and also factoring in the increased cost of taxes too, you have to compare, well, what could I do on the 1099 side with a retirement plan? With a 401k or 403b plan, you could do $24,500 on the employee contribution side, and then this 3% match with my hypothetical situation. So that'd be another $10,500. So all in, you've got $35,000 per year going into your 401k or 403b plan. You can contribute the $24,500. The 3% match for the employer, that's their contribution, and you don't deduct that, they do. Conversely, with a 1099 job where you're getting paid $400,000, you have the option, depending on how you structure it. If you decided to do S corp, S corp election is a way for you to basically reduce some of the tax liability on some of your income. I'm not going to make this episode about S corp though, because that's a whole rabbit hole that we can talk about another time. But there can be some benefits to doing so. 400,000, there may be some merit to doing that. In any event, let's just say that you did file S corp, and what that means is it dictates how much can go into your own solo 401k. Okay? Now, the reason why I mention that is because if you don't file S corp, then it's a different percentage. So for example, if you did not file S corp, it would be 20% of your net income that could go into the solo 401k. So, like, let's say you had just $10,000 in expenses, you're at $390,000, so that means that you could do up to $78,000. Now, this year, the contribution limit for a 401k is $72,000. So you're well above that anyway. And you can't do the 78, you'd be capped at the maximum. But that would be one way to do it. However, if you were to, conversely, if you were to say like, well, I'm going to do S corp, and so then it would be 25% of your salary. But then you also can do the $24,500 contribution as an employee. So it's like with not filing S corp, it's just 20% of the net income that can go into the solo 401k. Whereas if you file S corp, you can do the $24,500, and let's say that you paid yourself, let's say your reasonable salary was $300,000, and then you did 25% of that. That's going to be $75,000. You do the $24,500. You're well over the maximum again, and in any event, that whether you went filing S corp or did not, and just were a sole proprietor, or it could be a professional corporation, of course, but you're not doing the extra layer of S corp and payroll, paying yourself a paycheck, all that. Either way, my point is that you can put so much more into the sole 401k under this arrangement than with the W-2. Now, of course, you're the one that's making the contributions, so it's not like this is free money. It's just you're being allowed to take a larger percentage of your salary and put it into a tax-deferred, tax-protected investment account for retirement. So whereas you were going to do like $35,000 on the W-2 job, this one lets you put in more than double that. And while that is your expense, and you do get to deduct that contribution from your taxable income, so that's helpful. Nevertheless, it still does affect your bottom line, your cash flow. So you have to make sure that it makes sense for you. There can be other opportunities too, like cash balance plans. That's something where I really think your income needs to be at least $750,000 a year, and planning to be that level for quite some time in order for it to make sense. Maybe a little bit lower. You could do maybe 600,000. But the reason why I mention that threshold is because there are administrative costs in the order of $2,000 to $4,000 per year to administer a cash balance plan, because it's a pension. So you have to pay an actuary. You have to pay a third-party administrator, a TPA, to create the documents and to eventually file Form 5500, which is a form that has to be filled out for 401ks and cash balance plans if your asset levels get above certain limits, $250,000 or more. So there's more layers, and it has to make financial sense where what is the benefit of the tax deduction and the investment opportunity, and conversely, what is the cost of that cash balance plan? So you got to work those numbers, but there's definitely opportunities there. Then there's as far as investment contributions, that's fairly it in terms of like big picture benefits. There are deduction opportunities like CME, mileage, not from your home to where you work, but from your office to other places that you work, like satellite locations. You could argue that you have a home office if you actually are doing work at home, especially radiologists, but many others in medicine too do work from home. You have to have a bona fide home office that you could substantiate, and then of course traveling to locations is something that you could track the mileage for that. Scrubs, other equipment, things that you need to buy, conference costs. You're going to conferences. There's a lot of things that you can deduct as a 1099 income earner relative to W-2. W-2, you get you can't deduct any of that. But of course, on the other hand, there are also other things that you may have to pay for that can be deductible, but you have to pay for them, like insurance, like health insurance, malpractice insurance. Sometimes with the jobs that you work at, they can provide the malpractice coverage for the hospital that you're working at, but you need to pay close attention to what those benefits and coverages are so that you are truly protected. When you're a W-2 employee, generally malpractice is not something that you have to overly worry about, although you should look and see what type of coverage there is, especially tail insurance if you are to leave the job. But, malpractice insurance is definitely something you have to look at and make sure you have for yourself as a 1099 income earner. And then health insurance can be very expensive. Now, a lot of people, they also have health insurance through their spouse. Like if your spouse has a W-2 job, then that can be really a benefit, where they have a W-2 job, they get the benefits, you don't have to pay for them, they come through their job, and you have the 1099 income, so you get kind of the best of both worlds if you're married. There's also the scenario where you have your primary job as a W-2 earner, but then you have secondary consulting work, or even separate employer, a separate hospital where you're earning 1099, where you can yourself have the best of both worlds, where your W-2 income provides benefits. The 1099 income allows you to save more for retirement. Because even if your W-2 job has a 401k or 403b that you are putting in the $24,500 and your employer is matching, if you have supplementary 1099 income and you do it not filing S corp, just straight sole proprietorship, you can put 20% of that net income, that separate 1099 income, into a solo 401k on top of what you're doing at your primary job's 401k. Reason why I keep mentioning solo 401k too instead of a SEP IRA is because if you do a SEP, then you cannot do backdoor Roth contributions, which is a very common process for many of you physicians, at least the ones that I talk with, where you can invest further in a Roth account. but you can't have SEP IRA assets. So solo 401k is totally fine. Yeah, so there's a lot to consider. Obviously, the pay difference and the benefits that you get as a W-2 versus the tax and retirement savings contribution benefits and deduction benefits that you get on a 1099 basis. There's a lot to sift through. So take this decision slowly. There's a lot of information on online forums and social media platforms and books, and a lot of your colleagues talk about how 1099 income is like a promised land. There surely are benefits, but there is a cost. You deserve a thorough analysis. So make sure that you give yourself that opportunity to make sure that it's the best thing for you. And then you can draw, comparisons of the numbers as well as the intangibles like work environment, a little bit more autonomy perhaps with the 1099 role. So there's certainly a lot to consider, but think these things through, and then you'll be able to arrive at a decision that you're proud of and that you can feel good about. That's it for this week. Thanks for listening. See you next time.